All right, we start off tonight with the big Netflix reboot. Shares of the streaming giant rallying nearly 4% today to post their highest close since last April. The stock has now more than doubled from its May lows and is the best performing name in the Nasdaq 100 over the last 6 months. Media stocks, by the way, have been having a strong start to the year, too, with Warner Brothers Discovery up a whopping 30% in less than 2 weeks. But does Netflix's resurgence in particular set the stage for any sort of broader comeback for big tech? Should you ride this rally? Tim, you bought Netflix when it was close to its lows?
Yeah, it wasn't that good. In fact, I bought it probably, I don't know, within about 20% of its lows, and I watched it go down. And there's nothing really that sneaky about this Netflix move. In fact, it's outperformed the triple Qs by almost 70% on a 6-month basis. We kind of know what's been happening more broadly to triple Qs, which continue to make lower lows against the S&P. But in Netflix case, really a question about sub growth. What could they do? Were they suddenly forced to move into the basic with ads and then get into the password sharing? Antidotes for slowing growth? Maybe. They've got earnings next Thursday. I think those are really key dynamics. But I also think you've gotten to a place where I think media stocks overall, I think the streaming world has to prove profitable. And I think Netflix is as profitable as anybody. The key to Netflix really is 3 to 4% free cash flow growth over the next couple of years. This was something you wanted from this company. Their content continues to knock it out of the park. So I actually think, while it's not cheap and it was very attractive on valuation, you have to like the momentum here.
Yeah, Guy.
You have to like the momentum, absolutely. But it's now rallied 100% from the lows. I mean, that's a pretty significant move. And it was cheap 40% of the way up. Now it's starting to get expensive once again. It's probably north of 30 times next year's numbers, which leads you to believe
like that.
Into earnings, is it just time to start to pull the ripcord? Tim's right. The momentum is clearly behind. But I think if you've enjoyed this ride to the upside, you have to take profits in this name into earnings. I believe it's next week.
There are already questions about subscriber growth and how they're going to miss those numbers. Barclays just out with a note today about that. Although, I mean, I guess the question, too, is should we focus on subscriber growth for a company like Netflix at this point? Because that implies that it's still a growth company.
They don't want
as opposed to. Right. They certainly don't want to. They want.
But
they
that
want
doesn't mean we shouldn't focus
growth.
on it.
That's true. That's another.
Yeah, I would just say this. I mean, I think a theme over the next couple of weeks is going to be very clear: is the higher that some of these stocks rally that got killed last year rally into the results, I think the greater likelihood of a disappointment, because investors tend to discount certain fundamental metrics when stocks are down 60, 70% or something, and the sentiment's really bad. To Guy's point, up 100% in 5 or 6 months. I think that now fundamentals come back into focus, valuation comes back into focus, and especially again, we've been talking about this, the back and forth. Is the Fed going to stop raising? Are they going to, every other day you hear that they are going to stay the course, and I think ultimately if the fundamentals are weak in some of these companies and they guide that way for the next quarter or so, then with rates staying put, I think the valuation becomes back into focus, and I think some of these high growth names that are big moves off the lows, I think they probably get hit.
Karen?
Yeah, I agree. Guy, I think you had a 340 target was sort of where you thought it could ultimately get to. So I'm long, but this run is first of all, it never should have been at 162, right? It was 16 times earnings for a company that absolutely deserves a premium multiple. It is a premium business. The balance sheet's in good shape. They are clearly the number one in streaming, even though there's questions about streaming in general. But this run, I think, is too far. I'm going to look to sell some upside calls. I don't love it when stocks run so hard into earnings, just like Dan's saying. The bar's higher now. I don't know what they need to say to really keep going from here. I would think it would be sort of ripe for a little bit of a comeback.